Hello, everybody. So we got a good group uh, joining us today for it must just be that great of a topic. Everybody's excited to learn about audit success. And let me just make sure I got everything situated right here. Swap that. Perfect. So again, great group we got. Sounds like a lot of people registered and signed up for today. Timely topic, talking about audit success and preparation with a lot of us being in the call here today or being in the webinar. 12/31 year ends. That 2025 is wrapping up, and now we get the joy of looking forward to the 2026 audit. So we'll go through some ways to put us in the best spot as we get there. Like Christina mentioned, I'll try to get through using the Q&A feature. If I see a question come in, I'll try to address it in the like as it happens. But if not, we'll have some time at the end too for questions. Probably 45 or 50 minutes of content here or so, and then we'll have plenty of time for questions. And then the slides along with a couple of the materials that I have make sure get shared after. So just a little bit about me before we get started. So I'm a manager here in our assurance department. I work out of our Madison office. I've spent my entire professional career with Wagner, going on 7 years now. Most of my experience is with audits of nonprofits. I do work on a handful of commercial and manufacturing for-profit engagements as well, but definitely focus on that nonprofit area. And then again, in particular, into Madison, where a number of on-site audits and then some local clients that are also just within Madison. So the learning objectives for today, what we're going to aim to cover here: applying best practices that contribute to a smooth and efficient audit process, navigating the audit prep list and understanding the key document requests, anticipate common audit findings, and implement strategies to prevent them, stay organized year-round to minimize last-minute stress, and then recognize recent updates to audit and accounting requirements, which I guess a little teaser there is that thankfully only one slide on accounting and auditing updates. For those of you have been involved with audits the last 3 to 5 years, it feels like it's been some big changes, one after the other, with leases and with revenue recognition. 2026 looks a little dull, which dull is good. So we don't really have a ton of sweeping changes in terms of accounting, which is nice. As we kind of go through these learning objectives, the overarching theme that I hope that we can kind of tie in, or just to keep in mind, is that clients and auditors are a team. I think that sometimes maybe it's the movies, they maybe give the audit experience a bad rap, where you got the black suits coming into the conference room, they're ripping through files, trying to bust somebody. We aren't doing that. Audits are a good thing, and you've hired us for a reason, whether it's you need an audit from a bank, from a lender, different grant agreement, an IRS requirement, what have you. We're here to help you and to conduct the audit, to hopefully have it go as seamless as possible, and really, again, to work with your organization. I love working with my nonprofits that I specialize in, and just seeing the organizations grow. So we really are there to help, and I'm not trying to bust anybody during an audit. The best audits I have are the ones that really do go smooth, on all fronts. And so that's what we're trying to present. And that's just something to keep in mind, is I think sometimes it can be easy to fall in the boat of, the clients and auditors are working a little bit against each other. We're working together. We're in this together. We want to have a good audit. We want to have a good experience. Along those lines, just a little graphic here, but I understand that the folks in the webinar, probably 99% of you, maybe don't love audits. I maybe not lying awake at night dreaming about your next audit. Looking forward to that. I understand. I'm an auditor. I don't think I love to get audited necessarily. But what we do have in common is that we do want the audit to go well. I love my job. I like auditing, but I know I have audits that some go really well, and some maybe some room for improvement. And so it is much more enjoyable to work on those audits that do go smooth. And so even though my job as an auditor, my world is auditing. Again, we are working together. It is going back to that team mentality. Like we do want things to go well. And so that's kind of, I guess, yeah, as we're going through, keeping that in mind, my goal is to provide some insight just from my perspective as an auditor of things that, maybe turn an audit from good to not so good, or the other way around, where, doing these few things, those go a long way for sure for us as auditors, and then hopefully for you as your organization being audited too. So what makes a successful audit experience? There are a number of things. Kind of try to trim it down to a handful here, and really starting at the most basic level. Deadlines are being met. For those of you who are in the webinar today that have been through a number of audits, I'm sure you've had an experience now where you've had an audit that rushed right up against deadline, and hopefully you've had experience too where the audit was done a month before, and I'm sure you felt better about that one that was done a month before. That's the exact same on our end too. I think of our nonprofits. 11/15 is a big deadline for 990s, and how nice is it to be in October and not have a 990 to worry about? That's done. You could set it and forget it, and now you're back to doing the things that really drive your organization, rather than getting 3 emails a week from me or a different auditor about those missing 990 items, or whatever the deadline may be. Deadlines are part of the industry, but it sure is great to not just meet them, but to be ahead of schedule on them. The next thing here kind of ties back into the last slide, but not feeling overly burdensome or taxing to either party, the audit experience. So again, I don't expect you to long for the audit. It's not like it's going to be the highlight of your year probably. But what I don't want is for you to dread the audit. I don't want the clients that I work with to be thinking the whole year, oh, we got this audit coming up, it's gonna be a ton of work, it's going to be terrible. I don't want that. Like I want it to be a good experience. As good as an audit can be, I want you to have that that piece of it as well. And so keeping that in mind when we think about a successful audit. Not having journal entries or control findings. We'll talk about this again a little bit later in some more detail, but the other piece of a nice audit is that we don't have a lot of audit entries. We don't have a bunch of recommendations of weaknesses that are communicated to the board. Getting a clean audit opinion. Those are all things that I'm sure nice on your end of again not having that communication to the board. Nice for us too to not it's not like I don't look forward to writing up a internal control finding. So it's great to not have that kind of stuff. Not have those elements either. The next item on here, no surprises. There is a time and place in life for surprises. I would say that your audit is not one of those times. I don't think anybody, myself included, really wants to be surprised on an audit. Thinking from the perspective of the auditee, you don't want to feel like the audit's 90% of the way done, and then all of a sudden you're hit with, oh, I need these other 30 items. And likewise, I don't want to get halfway through the audit and realize like, oh, there was this new grant that has different compliance requirements we didn't think about before. And so, what can we do throughout the year to eliminate those surprises will be another topic that we cover within those learning objectives. And the last one is just opportunities for insight and feedback. It feels like this is kind of like the last level where if the four blocks above are happening, it's nice to just like, it sometimes feels like with audits, going both ways that, as an organization and as an auditor, it can feel like a lot of just in and out, very transactional, just rushing to meet that deadline. The ones where the rest of these four things go smooth, it's nice to be able to have a second to just breathe on the audit and provide some insights, some feedback. That's I think one of the benefits of being an audit firm is that I work with, again, I audit 40 other nonprofits throughout the year. So maybe you're thinking about a capital campaign. It would be great to go through some thoughts and some feedback, what's gone well for some other capital campaigns I've seen, rather than just feeling like, oh, we got a date at the deadline, we got to get this audit done. So kind of keeping these things in mind of like, these are the end goals. This is what we're hoping to get to, hoping to have that successful audit experience. And I think when I was looking through the participants, I saw a few of my clients on here. So I like to hopefully there's been a few successful audit experiences out there, and hopefully there's many more to come. So learning objective 1, apply best practices that contribute to a smooth and efficient audit process. So what I have first, it really does start with setting those fieldwork dates. Blocking dates on your calendar. And what I've got in bold here, setting audit fieldwork dates that work for you. Be selfish about it. Pick dates that are good for your schedule. Even as we sit here, for me at December 9th, I'm pretty flexible in terms of like the audits for the next 6 months, thinking of those 12/31 year ends. Like I can move stuff around if I need to, at this point. So if I, throw out, hey, we did the audit on, February 1st to the 4th last year, does that work for you? If that doesn't, that's okay. Throw out something that does work for you. Don't pick a week where you've got conferences, you've got that board presentation, there's maybe payroll is running that week. If there's a week that you already know it's just going to be busy in your organization, you've got a fundraising event, pick a different week. Be selfish about it because you really can drive that audit fieldwork date. And for the most part, we can kind of work with a couple different dates that we can find one that works for both of us. And the other piece of that too is just communicating any internal deadlines you have when we're setting those fieldwork dates. We're auditors. We're great at knowing the external deadlines. I know when 990s are due. I know when Dane County needs their audit reports, when the single audit reports due, the IRS deadlines. But what I don't know is that there's a finance committee meeting on the 3rd Wednesday of July, unless we're told that. So this is a great time to identify those types of internal deadlines so that we can make sure that they're getting met for both of us, where we don't get into a spot where all of a sudden now we're rushing to meet that finance committee meeting. Because that's like the last thing we want is to feel like we're rushing the audit to be meeting deadlines. And a second on this list here of just aiding in a smooth audit. Anything you can do to provide audit requests at or ahead of fieldwork dates and planning dates are great. I don't think I've ever been upset because I've gotten something too early from a client before. And where I'm hoping that this is beneficial, or like where like this maybe helps your audit stress, is that just like in my job, there's ebbs and flows of when I'm busier and not as busy. I trust that's the same on your end, where just because, maybe we want all the planning items by May 1st, if you have a week in March where it's just not that busy of week, you just got off a big fundraiser, you just don't have that much going on right now, send the files then. I might not get to look at them until a bit later, but send them at a time that's convenient for you, that works for you. Kind of just going back to that first, setting those fieldwork dates, at the spot that works for you. And I see too a question came in. What is meant by fieldwork? Is that part of the audit, or is that something outside the audit the auditor needs to know? So audit fieldwork, like I guess I kind of break the audit up into like 3 pieces. There's the planning for the audit, the fieldwork, and then the wrap up. The fieldwork, like that's the bulk of like where you come in. The planning is mainly, on our end, and the wrap up is mainly on our end. The fieldwork, those are the few days where we're either on site, we have them blocked in our calendar where we're going to be emailing you, going through audit requests and files. That's really the bulk of the audit testing, where, ideally, 90% of the work's going to take place. Hopefully that helped address that question on fieldwork. And I think that might even be kind of flowing into this next slide too. Yeah. So the last thing I have here is just, what can your role be in aiding in a smooth audit? Being as responsive as you can during fieldwork. Probably above all else, from my perspective as the auditor, um, being able to ask questions during those set fieldwork dates and get responses on those dates, super helpful. Um, like just like you have all sorts of other stuff going on. Once once our audit ends, we just go right into the next audit. We're just audit to audit to audit to audit, which maybe doesn't sound the best to you, but for me, it's a good job. Um, but so as much as we can get done during those fieldwork dates is great. And the best way to do that is to be able to ask and get questions answered throughout that period. I think this used to be a little easier and more straightforward when 90% of our audits were on site. But now that we have such a mix of audits that are on site and remote, it's not quite as easy as just walking into an office and like asking a question, getting a response. And so I know from experience that it's sometimes it's easier to ignore an email. Again, speaking from my own experience, it's easy to put that aside for a minute. But as much as you can to respond to those emails, at least during those fieldwork dates that were hopefully picked because they work for you, is probably above all else, like just so helpful to the auditor, to the audit team. I got a question here too. How long after the end of our fiscal year do you recommend scheduling the field work? It's a good question. So I would recommend, so just thinking about like December 31st year ends right now, really anytime, usually like for me, if I don't already hear from a client in terms of like they need an audit by this date or they need to schedule by then, which isn't super common. Like I feel like usually I'm the one reaching out initially, but usually it's in like December, January. So within a month of year end is ideal. But I have some clients that they just know like we're on a very fixed schedule, a rigid, we have an election cycle coming up, each year where they set their like fieldwork, like right when one audit ends, they just so it's set, so we already know about it for next year. So it can be as far in advance as you want. And generally the farther the better, or the further out the better. Just again, more flexibility in terms of like, let's pick a date that works for everybody. But I'd say most typical is within a month of the end of your fiscal year is most common. Okay. Moving on to our second learning objective here. Navigate the audit preparation checklist and understand key document requests. So once we got fieldwork all set in stone, kind of the next sticking point or the next area is that audit prep list. And for those of you who aren't familiar, it really is like the holy grail of just like, this is what we're going to need for the audit. This is where we list out, these are our primary requests for the audit. And like scheduling fieldwork, usually plus or minus a month of year end is when your auditor will send this out. And I just put a snip on the screen here, but if you've been a Wagner client for a while, you're probably familiar with SureLink. We've been using that for the last couple of years. So that's where a lot of our request list will come from. And I think as far as like barriers on the request list, on the audit prep list, probably the two most common I've just heard from feedback from other clients on, and just from experience from auditing, are getting overwhelmed by it a little bit and then sending the wrong things. So I just escape for a moment here. This is just an example of a request list, just a sample client here, and it is daunting in the sense that this is an example, but 40 some items. There is a lot here, and I think it is easy to kind of open this up and see like, oh my gosh, how am I going to upload all of this for the audit? Like, what am I going to do? And we'll talk about some techniques, some organizational techniques a little bit later on in the webinar. But what I wanted to point out, and what I've heard from just other clients, is like they were just dreading it for a while, and then they finally went through and like they had to do it, and like, oh, I guess it wasn't that bad. There are a lot of things that we usually ask for like in the audit, especially in the planning piece, that really are like 2 minutes or less types of requests. Like we might have 13 items here, but the treasurer contact information, a board listing, a lot of these like trial balance, general ledger, the balance sheet, profit and loss, just reports right out of the accounting software out of QuickBooks where, if you're somewhat familiar with, utilizing those or your accountant is, those are reports that take under a minute to pull and just to drag in here. So while it is a lot of maybe individual items, um, it's maybe not as bad as meets the eye. Some of these things are, only if they changed from last year. And so I do think that's just one thing I just want to project just that. And just from hearing it from other clients, it's just, it's a big list, but once you kind of get into it, it's maybe not as bad as it looks. So don't be scared off by the initial prep list. Oh, and speaking of which, good timing, so I don't need it anymore, but looks like I got signed out from SureLink. All right, come back here, swap views, and then actually I see a couple of questions. Oh, sorry. So I don't think I answered that first one about scheduling just right. So the question I think that was intended to be was when should fieldwork occur relative to the end of your fiscal year? There's not a right answer for that. It probably depends a lot on those internal deadlines as well as external ones. So if like we cannot extend our 990, we need it done by May 15th if we're a 12/31 year end, probably have to have that audit sometime in February or March at the latest to make that happen. Where that's just where like when we're going through the scheduling process, if you just communicate any deadlines that you know of, and we're as auditors aware of those external ones, then we can kind of back into like when should we have field work to make sure we're meeting those deadlines comfortably. So hopefully that helps better answer the question. Then I got another question here. We received our SureLink list, but there aren't any due dates on anything yet. When are those usually assigned? Well, first of all, kudos to, I'm not sure who your in-charge auditor is, but looks like they're on top of things, sending out that request list. I feel like I'm a little more on the plus side of fiscal year end, but you're close. I would say the due dates, they're not always used. So for me personally, like when I send out like my scheduling request for my clients with my audits, I usually include just like a date in there of this is when we need to have the planning items by, and this is when we would like to have like the fieldwork items by. So I usually use that, and sometimes I set the data and sometimes I don't. But if you're ever unclear on like when do we need this by, just ask. The in charge, the audit contact. That's an easy answer for them to pose, even if they don't put it in SureLink. So the other barrier then that we've seen with request lists is just having item not be right or get rejected. So I've listed out 4 examples here of probably the most common situations where I've had to send something back or ask for a follow-up. First one being anything from the accounting software, so like QuickBooks, please send the reports in Excel. That's not a Jordan Dittmer specialty. That's I think if you pulled any of our auditors here, Excel just works a lot better when it comes to manipulating the information to put it into our audit software versus like a PDF doesn't quite come out as nicely. And so that's an easy one where you're pulling the right report, but just clicking the button in QuickBooks or your accounting software to have it generate in Excel. That's a pretty common reason why we would send a request back as like, oh, it's in PDF, and it is maybe not on your end, but on our end, it's like night and day difference between working with that Excel file and that PDF file when it comes to getting into our software. The next piece I have here is investments. And usually everybody does a pretty good job of sending like the investment statement for the end of the year. Where we kind of get common like incorrect or rejected items is we are looking for, we also want that full year investment activity. And so especially for those like June 30th year ends or those off year ends out there, it's not always right on like the June 30th statement. Sometimes you need multiple statements to kind of compile that. So a lot of times it'll be like the December statement and the June statement. But just making sure there's some sort of a year-to-date column on that investment statement. That again, that's one of the main areas I think that gets sent back just because we've got some of the information, but not quite all of it. With credit card and payroll statements, here we're usually just looking for the statement that overlaps year end. Kind of the common faux pas would just be getting a statement that ends sometime in December or starts sometime in January. Usually we're focused on that one that's overlapping the end of your fiscal year. And then probably like the most like time consuming request on your end would be the request for nonprofits, I've got contributions listed here. For our for-profits out there, our commercial manufacturing clients, the sales revenue piece of it, generally one of the most time-consuming requests in terms of like, we're looking for 5, 10, 20, 30, plus potentially items. And this is one where I really want you to have it right, because for 30 items to have to go back and re-pull or re-look at those, that's no good. We gotta avoid that at all costs if we can, because I feel bad when that happens, when we get the wrong thing. And what typically happens when we don't get exactly what we're looking for whether it's the sales revenue or contribution revenue, is a lot of times we get uploaded files that are internal. So maybe it's that sales invoice. We're really looking for the third-party piece of verification. So for contributions, we're looking for those award letters, the signed grant agreements, and then on the for-profit revenue side, not just like the sales invoice, but the purchase order, the signed bill of lading, the picking ticket, items that have involvement by other parties as well, not just that internal invoice. And what I really recommend for revenue, because this is one too where it's different from every organization. Like a contribution at nonprofit X might be a different type than at nonprofit Y, and same thing with sales revenue across different commercial clients. And so what I recommend is when you get that list of 30 items, if you aren't sure exactly what is needed, just send one. And I'm more than happy to look through that one and like, yep, this is what I need. Go ahead with the other 29. Or like, actually, this isn't what I was looking for. Can you try this instead? And then getting to that spot before sending all 30 of them and finding out like, ooh, that wasn't quite what we needed. Because again, that's when it's sad, I guess. It's a bummer because it is a lot. And so really want to have that be right on the first try if possible. Okay. The next piece here is anticipate common audit findings and implement strategies to prevent them. So this goes back to the idea of successful audit. We want to limit the audit adjusting entries, the internal control findings. And actually, I see I have a question here. Let's see. I'm confused about the common rejected items such as investments. Why does client reject auditor's investment fiscal year activity? So maybe I wasn't super clear with the investments piece. So typically, what we're asking for investments is, I guess, one, we do want that year-end total, what's our investment balance at the end of the year, but we're also looking for what was the activity in the investment throughout that fiscal year. So the gains, losses, and it's usually on the statements. It's just not necessarily on every statement. So if it's a December statement, usually those come out okay because it's got the year-to-date column. It's most common when we've got that off year end where we don't necessarily have that full year of activity by just that one statement, or sometimes we need additional statements to supplement that. Okay. So with again, kind of the idea of avoiding journal entries or avoiding those missteps in audits, because nobody likes to have an audit entry, to have a control finding. Not if you can cover everything here in a 1-hour webinar, but I did pick a couple things that I feel like are the most common that I see in terms of if we have a journal entry, half of them come from this one thing, this one type of mistake. And the most common one is an expense getting recorded in the wrong period. And I'm not going to get too crazy into the gap of it. I know we've got a wide demographic of individuals in the webinar, but just broadly speaking, expenses should be recorded when they're incurred, not necessarily at the same time that the bill is paid. And so, if you think of you hire a contractor for cleaning, they clean in November, they don't send you the invoice until December, January, and you pay it then. We want the expense to be recorded as of November, and then have a liability for that until that payment is made. And again, I guess it's probably stemming partly just because again, not everybody in here is an accounting major, and so it's not always that intuitive of like, why shouldn't I just record the expense when the bill is paid? But this just happens to be like, again, if I could just look at all the journal entries that Wagner had, on audits in 2025, I would just bet half of them come from this, of just that expense getting recorded when it's paid, not when the service took place. And so what I've recommended, or what we've got on the side here, as far as just like a recommendation that hopefully takes 30 minutes or less to kind of prevent those types of entries, are just running a report out of your accounting software. So say QuickBooks, showing all your checks paid the couple months after the end of the year, selecting the 5 to 10 largest bills. Don't need to look at everything, but just, pick the big ones, pick the big bills after year end, and just make sure, what period did those bills relate to? Was that for November cleaning, or was that for February shoveling? And just making sure that the expense is matching up to that period. And what I did have too is, and I think this will go out after the training, but just a example of what that might look like. So just kind of put those same instructions in here, but it really is just, I'll use QuickBooks as the example. That seems to be one of the more common accounting softwares that we see. Just running that check report for February, or for January, February, March 2026, if your audit is in April, picking 5 to 10 of the largest expenses, and just making sure that year of service, so that November cleaning, that's when the expense got recorded. If it was February shoveling, the expense got recorded in February. Making sure that those years match up, and then we shouldn't have any issues with that during the audit. For whatever reason, that just happens to be where probably half of our entries come from, is an expense just not lining up in the right period. And that's something too, where if you have a question on an invoice, if it's not super clear, happy to help on that too. If you just send your audit contact a quick message, it's usually a pretty straightforward one for us, where we can answer that pretty quickly. But yeah, just, I don't know, that's one where save the mistakes for the hard stuff, or for like some of those unique situations, and try to limit it on this one. That's just, again, it happens to be where we just see so many of the journal entries that we make during the audit, that's where they tend to come from. Okay, just give me a second here. Okay. The flip side of that is having a revenue item recorded in the wrong period. Actually, just see a question come in. So if you have an invoice, say from April, but it doesn't get paid until December, should that be recorded in April or December if we close each month as we balance? So if the invoice is from, so I guess I'll use like the year 2025 here. So if the invoice is from April 2025, and that's when the service happened, that's when the cleaning happened, the shoveling happened. If you don't pay it till December, you would just record that in April, as you would, have an expense account you'd have an expense for that cleaning service. You'd have a accounts payable, a liability for that cleaning service all the way through December. In December, you finally make that payment. Now in December, you would remove the liability, and in cash would go down as you made that payment. So hopefully that kind of helps answer that. But again, if there's any invoices that seem tricky or you're unsure of, same thing with on the contribution side. Just ask your auditor. Like, I would love to answer these questions like upfront rather than during the audit, where then it becomes an audit finding or an audit entry. And really, too, like both of these tests, what you're doing is like very similar to what we're doing during the audit. A little more maybe arithmetic in terms of like how we pick like the specific items or how many, what dollar amount. But broadly speaking, like you're doing what you're doing, so it's kind of like just a first check before it gets to the audit, and then we're the ones that check it. So I think that's a really great procedure to have in place. It probably takes 30 minutes or less, especially if you're familiar with those purchases. Like, oh, I just know that was November. I just know that was February. Um, let's see. We are having an issue where activity happens in April, is billed in June, and then paid in August. Yes. So that unfortunately, like that, it is a bummer. Like perfect world probably is like the vendor just sent you that bill right away. Um, doesn't always happen like that, unfortunately. And so, oh, there's another part to that question. Sorry, just yeah. Yeah, so and I see then the follow up there to that question too was that there was a gap between grants and then what for the accountant to book. And so generally speaking, too, grants are reimbursement basis and they're based on expenses that occurred in a particular period. And so those should sort of coincide where in this case for the example that the in the question here, um, the activity happened in April. That's when we're going to book the expense. Um, Potentially you don't know that bill until June, which if that's the case, like maybe like you knew that you got landscaping, but you didn't know exactly how much it was going to be until that bill comes in. That's fine. Once you get that bill in June, at that point, just recording the expense, making an entry back into April um, for the expense. And the other piece of it too, I guess, like, I don't know if in this question we're looking at a 6/30 year end or a 12/31 year end, but it's not the end of the world if like there's some like wonkiness like between months that are in the same fiscal period. That's usually okay. It's mainly the ones that cross the end of your fiscal year. Those are the ones that are most critical. Are the ones that cross your fiscal period. Um, so with on the revenue side, it's really the same thing where we don't see this as much of an issue with for-profit clients, just because with for-profit clients, the revenue recognition is a little more straightforward. On nonprofits, it's not quite as intuitive, just because contributions should get recorded like when a pledge is made or when a promise to give is made, not necessarily when cash is received. And so, kind of that same method of detecting, like, ooh, did I miss a pledge, is just running through those same steps, but now looking at cash receipts, not cash disbursements, and going from there. So very similar, very similar to the accounts payable one, but just on the revenue side now. And again, very similar to the audit test that we do as well. So it's kind of like the first check before it gets to the audit, where hopefully you maybe catch the error before we caught it. And if you really like doing that, maybe you should be an auditor. Maybe. Okay. Next here we've got just journal entries in general. Um, you Journal entries in general. Uh, at the end of each audit, we do send a list of all the entries that were made. And so if one of your goals is to avoid having those entries next year, just take a look at the list of entries from last year and like, oh yeah, I can make this entry, or I'm not really sure, I can't remember what happened there. And maybe talk through your auditor with it so that you can make it on the front end this year and then not have that audit entry. For me, I typically send out journal entries when I send out the draft. So that, there's a good chance that's probably lost in like 9 months of emails, where if you don't have that list of entries from last year, just ask. We've got it saved and it takes like a minute for us to send that over. So if you're looking for last year's entries to, again, try to avoid having those same types of entries this year, just ask. We send out that list. And then if there's items you have questions on, we're happy to address those on the front end as well. As much as can be really addressed on the front end before the audit starts, before we find the error, that's a great way to just like kind of not have those audit entries. Like even if we're just at least talking about it before we get to the audit, that's usually sufficient enough. Okay. Then the last item here on the common mistakes are just on the internal control side. Again, ideally not having significant deficiencies and material weaknesses. And probably the biggest thing that you can do is just, did we have any last year? And if so, can we implement any changes for that? And if you're thinking, I have no idea if I had any control deficiencies last year, again, just ask your auditor. We say those in a letter. It takes like a minute for us to pull and send. So if you're curious, did I have any control findings last year? Just ask. Happy to send that letter back over if you don't have it saved from last year. And then, think about implementing the recommendations from the letter. And then ideally then preventing having that same finding this year. Okay. Let's see. Got a couple of questions here. When we are billed, we get additional surprise fee for extra work questions. This happened for audit and tax return 990. For the 990, I had to have them correct mistakes. Should we pay for this? Is there a way to prevent these surprises? Pre-audit meetings, questions to ask. Yeah, so that's a good question. Like, I want you to ask questions. I don't want you to feel like you're going to get a surprise bill necessarily from those questions. And it really depends on like the extent of the work. Like what we've talked about so far, like if you're asking me, hey, can you send that letter? Can you send the journal entry report? Can you take a look at this expense invoice quick? Usually things like kind of our rule of thumb is that like if something's less than 15 minutes, generally we shouldn't bill you for that. We kind of within our like audit fee, we kind of anticipate at least getting a question each quarter or something like that, 15 minutes marks. If it's something that's like, oh, sorry, went too far on the slide deck here. If it's something that's like, whoa, this is not like a routine expense invoice. Like, what do we need to do here? If that's the case, one, you can ask when you send it, like, hey, is there going to be anything extra for this? Otherwise, if there is, maybe I'll try to figure it out. But generally speaking, if you just ask on the front, like we can tell you like yes or no, and trying to limit that as much as possible. I think it's coming up on one of these slides here, but I always feel like for me, it saves me time. 9 times out of 10, it's always faster or like more time efficient to address like questions as they come up throughout the year than have a mistake during the audit and then have to go through the correcting process for that. So I'm usually pretty lenient, like where I'm okay with getting some questions during the year. Like I don't want to like feel like you're going to get billed for a 5-minute question. Usually it's those more like extreme examples, or if there's a lot of entries, that'd be another case like where if we're working 10 to 12 entries, like that does extend the audit quite a bit. But I think the main thing is I would be in touch with your audit contact about that if you're worried about that. If you're trying to limit that situation. So staying organized year-round to minimize last-minute audit stress. So maybe for those 12/31 year-ends, we still got like 21 days left in the year, 22 days left in the year. But, still a little bit of time here. And even forward thinking, and for those off year-ends, what can you do during the year to kind of cut back on some of that, stress that happens up during the audit time. Probably the number one organizational tip is just keeping copies of those electronic records. We're auditors, we're accountants, like we're not living for change necessarily. We're not trying to reinvent the wheel each year as far as, what we're going to ask for. Like, I feel pretty good that like 90% plus of what was on our request list one year, it's probably going to be very similar next year, in terms of what we're looking for. And so, saving files throughout the year as you come across them, that's a great way to just kind of be prepared for the audit. And, then when that request list comes around, it's hopefully just dragging files, from your server, from your computer, right into the audit file. and easy as that. The one that always gets me is board minutes. Seems like sometimes there's like it's always trouble like tracking down board minutes. I can promise you that for every review, for every audit, every year, we're always going to ask for board minutes. Always going to ask for them. As they come up throughout the year, just save each month in a folder somewhere, and then when the audit comes around, 12 months right into the audit file, and we're good to go. Second item I have here is just having your team be aware of what's needed for the audit. Again, we've got a kind of a mix of who's on the call here today, who's on the webinar, from accountants to management, executive directors. There's a lot of you that play a direct role in the audit. There's also a lot of members of your team that probably like indirectly impact the audit. And I think of like a nonprofit, like if you're on a development team, maybe you don't realize like how important like that third-party award letter, that email is from the donor. If they knew that, maybe they're saving those files somewhere where come audit time, it's a real easy pull for them. So just when possible, having your team be aware of on what's needed for the audit. And then the last one, and this is I think kind of to one of the previous questions that came up, but communicate with your auditor throughout the year. Maybe I think most of us share the same sentiment as auditors. Like I'm happy to be in the loop as questions come up during the year, especially big changes to operations, especially unique accounting items. Like if there's this is an odd debits credits kind of thing with my journal entry, just ask us. Like I said before, 9 times out of 10, it's way more time effective to try to resolve those questions as they come up, rather than getting to the point of working on the audit, realizing there was an error, and then trying to correct it. Because not only does that take maybe a little more time, but then also we have that piece of like the audit entry, potentially a control finding. And so, happy to get things throughout the year. Just send those to your audit contact. Sharing key documents like a new grant agreement or a major award. If you get a major grant or a major award during the year, if you have the letter handy, the signed letter, just send it at that point, and we'll put it in our audit file, and we have it for next year now. So just keep feel free to use this as a resource, I guess is what I'm saying. We're here. Again, I guess I audit 40 nonprofits during the year, every year, and so we see a lot of things. Like maybe for you that capital campaign pledge is unique, but I just had that 3 other times last month. Where it's for me, it's like, oh yeah, that's not too bad. I've seen that recently. I can help you out with that. So just keep us in the loop. Worst thing is that we aren't sure, and maybe you have to do a little research or a little more digging. But just feel free to ask those questions throughout the year. Okay. Then as we get to our last learning objective here, recognize recent updates to audit and accounting requirements. I teased this right away, but thankfully there really isn't a ton this year in terms of at least like maybe I'd say like bad changes. Like there's not that lease standard coming out anymore. Probably the biggest change on like the nonprofit side are some of these audit thresholds. And for those of you who are on the call that are 630 year ends or I guess just not 1231 year ends, these are already in place for the 6/30/2025 audits. But now they're in place for 12/31/2025 and every audit going forward. Is that the uniform guidance the federal government has raised the threshold for needing a single audit from or up to $1 million. And then for a lot of our Wisconsin clients, maybe one of the drivers of getting an audit is your contribution levels. Well, for an audit that went from 500 grand all the way up to $1 million to need an audit, and then for a review that increased from $300,000 to $500,000. So some increases there in thresholds to be aware of it. If that was the main driver in your audit, or you're kind of right on the cusp of one of those and you're not sure what you're going to need, just knowing that those did increase a little bit relative to previous years. It was the first time in a while there was a change. I just got a question here for a second. Could you clarify when questions are appropriate of the audit team, and at what point questions advice would be considered advisory and not appropriate to answer by the audit team to maintain independence? That's a tricky one for us. Yes. So that's a good question. So at what point, like, because we, as an auditor, we should be independent. That's why we're being hired. That's why we're used as an audit firm is because we're independent, coming in auditing the financials. So really, like we can provide accounting guidance. What we need to avoid doing is like making the judgment for you. So for an example, if you're thinking about how long I should depreciate this new truck for, we can give you kind of recommended ranges, but we don't want to be the one to like make that decision. We can kind of advise you on like, this, looks like a good way to record the entry. This is kind of what we've seen other clients do. But again, we're not the ones that are going to QuickBooks and booking the entry. So it's kind of that line of like, we're still not doing it. We're just providing you kind of with our feedback and our kind of advice on that. And usually too, like if we ever feel like there's a situation where we are getting kind of close to like maybe not being independent, we'd bring that up. But that usually that's pretty rare. It's somewhat common practice or fairly common practice to be able to interact with your auditor and ask questions about accounting, especially like I guess some of the nonprofits that I work with are relatively small. Some are very big. For the small ones, it might just be you as the accountant there, where you might not have an accounting department to go to with questions. Where sometimes it is nice to be able to just bounce something off an auditor, and that's totally okay. Um, the last kind of just change is allowance for credit losses. Uh, this one I don't expect impacting a high percentage of the clients that I work with, but if you're in a spot where you have accounts receivable and you have a significant amount of like bad debts, credit losses each year, just reach out to your audit contact and know that there was an issued expedient, which hopefully like lessens the burden of how to calculate that allowance account. So again, not super common. So if you're thinking like, I don't know what that is, I don't have one of those, probably doesn't apply to you. But on the chance that it does, just just know that there is a newly issued expedient out there that's intended to make things a little bit easier when it comes to estimating your bad debt allowance, your allowance for credit losses. Okay. I think that, yeah, I got through the different objectives there. Happy to now kind of just take some time and don't see any questions in the chat at the moment or in the Q&A feature down here. Any other, just questions or thoughts from going through this today? Hopefully I was hopefully you could all see my screen okay throughout the process. Switched over to a different office, so a little back and forth, but we made it. Let's see. I got a question. Do you perform audits for out of state clients? Yeah. So, well, for sure, as a firm, we do. Trying to think. It's been a little while since I've gone out of state for an audit personally, but as a firm, yeah, that pretty common. I mean, I still our base is definitely in Wisconsin, but we do a lot of audits in New York, a lot of audits in DC, and then we have a lot of cooperatives or some larger nonprofits or that are spread, more throughout the country. I had a question. What about my question? Was one missed throughout the presentation? Let me. Oh yeah, so I see. So I think it was the fiscal sponsor question. Maybe that I'm seeing that didn't get answered. So I work for a fiscal sponsor, and we get invoices to be paid from our fiscally sponsored orgs that can be from months ago and need to be paid now. Would we still record when the service happened based off the invoice, even though we didn't know it happened until months later? Yeah, that's kind of a tricky one. I think it depends a little bit on what are the services, and is it something where you're getting a similar invoice each month? If that's the case, you know, probably the main thing there is just having 12 months of expense recorded. each year. But I guess not knowing too much more, it'd be hard to give a perfect answer on that. Um, Generally speaking, though, like when possible, recording it when the service happened. I think maybe to actually to elaborate on that question a little bit more is like you might not know the exact dollar amount today of what that was, but you knew that the service happened, and so sometimes it's sometimes you do have to wait a month or two to be able to get that invoice to iron the exact amount, and that shouldn't be that common. I would think like most cases the prices are agreed upon upfront, but yeah. Happy to that might be a better question too for your audit contact who's a little maybe more familiar with the situation, but that's kind of one of like the saving graces or kind of what we check then too, like if there's situations like that where it is a little weird, you aren't getting invoices very often, just making sure that there's 12 months of expense recorded if that's the case. Paper versus digital receipts. We need to transition to attaching photo receipts of our QBO payments, but we need to go back and worry about the years of paper. They are organized by month or year. Yeah, so I'm picturing this big box paper files. So I don't know what they are off the top of my head, but there are certain statutory requirements, like you need to have like paper copies. I want to say it's or not. You need to have some copy, whether it's paper or whether it's electronic. I want to say 5 years back, but don't quote me on that. I don't have that off the top of my head. But I would say at a certain point, like if we're talking about this box of files that's down in the closet that's been there since the 1900s, that's not coming up here in the audit. Like you'll be all right there. And then, oh, I see there's a question too. Maybe I didn't get to on the last slide. Just with the change to internal controls, like the riskier areas tend to be revenue related. So there's been a little bit more of a focus on controls that relate to revenue, as well as journal entries. So potentially you've got asked a few more questions than usual in the past, or going forward, you might get a couple more questions on that. But that's been kind of one of the auditing standard changes is less of an emphasis on controls over not as key areas and more of a focus on controls in those riskier areas. Okay. Oh, I did see. Maybe I don't. I got a question here about. Looks like somebody's interested in insurance. So, maybe I swayed somebody in the right direction. Join the good side. And yeah. So, what are the audit responsibilities? As each level as a staff, senior, manager. Usually, it's just as a staff, you're more kind of helping on the audit. You're not necessarily the primary point of contact. Kind of as you get to that senior supervisor role, you're the one responsible for running the audits, and then kind of at that manager level, at that point you're still running audits, generally maybe larger audits, and you're also overseeing some. You're kind of that resource for the staff, for the senior, for the supervisor on an audit that maybe used to work on. So kind of just keep moving up there like that. Is there anything we should watch out for specific to journal entries? The big thing with journal entries that's been the emphasis is that somehow they're getting reviewed. Kind of like the catch-all is like ideally there's at least a financial packet that's going to the board or the finance committee each month with all of like the profit and loss balance sheet that's going to have the impact of all the entries. Best practice probably is just to like each month just run a report out of your accounting software showing all the adjusting journal entries and just send that over to the finance committee, maybe over a certain dollar amount. But just the intention, or what's kind of been the push, is that there's some sort of a review of journal entries and the impact of those journal entries. So again, the most common kind of control, the overarching one, is that the board or the finance committee is looking at financials each month, because that's going to have the impact of all those journal entries in there. Another question about audit thresholds. I don't understand about single audit, Wisconsin audit, and Wisconsin review. Yes. So single audits, those are required by the federal government when you expend now more than $1 million of federal expenditures. And then, so this is looking at just federal expenditures to meet that single audit requirement. For the Wisconsin thresholds, Wisconsin, has their own laws, not related to single audits, but just in general for nonprofits. If your nonprofit raises more than 1 million in contributions, they require you to get an audit. If your nonprofit raises more than $500,000 in contributions, they require you to get at least a review. I think it's just intuitively it makes sense. All three of these thresholds from the standpoint of if you're getting $1 million in contributions, probably makes sense you should have an audit. Make sure your books are in line. There's no major control deficiencies. So that's kind of what Wisconsin's getting at there by having those. Every state's a little bit different in terms of their thresholds. But Wisconsin, I think, is relatively standard, and again, the one we see the most at Wagner. Have both the Wisconsin and 990 filing requirements changed as far as thresholds? So 990 requirements, those I think maybe the requirement you're thinking of is the 1952, like that state return that goes with the 990, because that's tied to this audit review threshold. 990, like when a 990 is required, that hasn't changed. But just if you need to attach an audit or a review to the 990, that's what's changed as far as those dollar amounts. And then does an audit still need to be filed for those contributions in excess of $500,000? So going forward now, 12/31/25, if you have between $500,000 and $1 million of contributions, you only need to do at most or at a minimum a review. You certainly can do an audit that satisfies the review requirements as well, but they kind of is a stepping stone piece. So the review is required for over $500,000, and then the audit at that point you need to attach that to your 990 if you have more than $1 million in contributions. For that helped there. Don't see anything else coming through at the moment. I just want to again say thank you to everybody for joining. Like I said, it was a great turnout today, which is awesome. And wishing everybody the best as we get into holiday season, and most importantly, wishing you the best as we get excited about our 2026 audits. I'm sure they're all going to go great. I hope you all have great audit experiences and you have a great time. Great holidays. So I really appreciate it. Everybody turning out today, and have a great rest of your afternoon.